Welcome to the One Hand at a Time podcast. I'm your host, Chris Welton. And today, I know it sounds like the same thing over and over again lately, but I have another guest that I met out of the mastermind. And if you're not in the mastermind, you are missing out. So I have her bio in front of me, but man, it is like so solid. We'll get into it a little bit more later, but I want to say this is my friend, Kortney Murray, who's on the show. And I welcome you to the show, Kortney.
Thank you, Chris. I'm so excited to be here today. And it was just amazing meeting you at the Mastermind because I had watched your podcast before and learned a bit about you. And I just think your story is so amazing.
Well, thank you. I was telling my wife who was coming on today, and I said, she was one of the first people to ever walk up to me at an event and go, "Hey, I heard you on Ben Newman's podcast, and I really loved your story. It was one of my favorite episodes." I'm like, man, that was like kind of a surreal moment when people are actually listening to what you're doing. Like, I don't know if anybody listens or not. Like, we just get on here and record and hope it works out, right? So I appreciated that. And then we were able to bond this through other things throughout that event. I mean, what a powerful event it was, and the relationships we've built from there. Look, I want to jump right in, and I ask this question a lot when I'm interviewing people, and it's, what's the most powerful lesson you've ever learned?
I think that the most powerful lesson is that life is really it's so special. And so picking yourself up from failure, and that's, right behind me. I have failure leads to success. I never knew I was going to be on this 40-foot billboard in this picture. I was not prepared for that. And I had gone up and to tell my story, and the failure that leads to success is picking yourself back up. When you realize that monetary values are so unimportant in life, it's the values that you learn how to pivot and adjust through the hard times that create the success. I think that that is really the most valuable lesson, because if I gave up on myself all the many times that I've failed in different things, projects, business, then I wouldn't be sitting where I am today and being able to meet people like you at masterminds and things like that. And so that's really the best lesson.
You know, I agree with that. That's one of the best answers we've ever had on the show. So I appreciate your honesty there. Here's one of the things I've learned as I've gotten older, and I try to explain this to the younger generation or anybody that I'm trying to help, is if you do the right things, the money will come. Like, if you take right action, you're consistent, and you treat people fairly, you will get opportunities to make the money. And it's easy for me to say that because I've gone through the ups and the downs, right? Like, I've crashed and burned, and I've built myself back up. And if no one's ever made it out of that hole yet, it's hard for them to take that on and listen to that, right? So I'm just curious, when was the first time you realized that, okay, things are not going the way I want them to go, but I've got to stay on task because I know that I can get through this?
So that's kind of a loaded question, because there are two times that are really apparent to me. One was I owned a clothing store in my 20s. I know you heard the story when I was on stage, but I was a young entrepreneur that tied my personal credit to the business. I didn't know about protecting myself with an LLC. I was a sole proprietorship. And so my social security number becomes your federal tax ID number. And at that point, you're commingling everything with your personal credit. And I lived in California, and we had a lot of fires out in California, which I'm sure everybody is under the impression that California's on fire a lot. But with that said, I had a clothing store, and the smoke damage came under the door and ruined the clothing, and I was undercapitalized, and I had to basically figure out a way to get out from under not only having to close my store because I didn't have anything left to merchandise, any money left to merchandise the store, but also I had to pick myself up from the personal credit damage that I had done. And so with that being said, early 20s, knowing that I was in debt, I couldn't take out debt. I had IRS after me for tax, liability because it was sales tax that we owed, and we weren't moving the clothing had to so much damage, there was nothing I could do, and then there was vendors that were owed, and so it was like one thing unraveling after another, and I at that point you just feel like you are helpless and there's nothing left to do to try to pick yourself up. And so I think that at that point I realized how intelligent I actually was, and I sat and read about how to clean up my own credit credit. I read about the things that you could do differently. I took a position in business finance, realizing that there is something that I could be learning for business entrepreneurs to not be put in that spot and start helping other people. And so all these things started happening, slowly, but then I started rebuilding my credit score. I started getting, things taken care of that I didn't even know I could do myself. And I started building my confidence again, realizing that this is just a situation I'm in. And even though I didn't have the help or money to help, there was things that you could learn. And so as you learn, one of my favorite mentors said to me, if you do something for 18 minutes a day, you study something for 18 minutes a day for 1 year, you become an expert. How hard is it to study something 18 minutes a day? So I think the helplessness comes from not having a pivot and a direction. And so if you start creating direction and pivot, then you can really come out of that. And so that was a major time in my life. And then recently, our business, because of manufacturing from COVID, has taken a hit because manufacturing is backed up and we're an equipment finance industry. So when people need equipment and can't find it, we can't finance that equipment for them. And so to pivot our role in that has been a journey on its own. And so it's just, you learn how to do it quicker when you become older and more knowledgeable of it. So
Yeah, I want to say I suffered the same thing early on in business. I was partners with somebody. I signed for everything, put everything in my name personally. And I took a massive hit when the partnership dissolved and one of my partners embezzled money. It was just a crazy, like a Lifetime movie kind of situation. But I learned from that, right? And I share that story freely with other people so they don't make those same mistakes. And I had a conversation with Ben recently. Ben Newman and I were on a conversation, and I have a newborn son who's 11 weeks old yesterday. And I'm like, Ben, I feel like I'm not getting the things I need to get done because I'm very OCD about my morning stuff I have to do before I take a call or do anything. And he's like, yeah, you're going to have to give that list up. He said, you need to get it done by the end of the day, but you need to pivot, right? And I'm like, I don't know if I can. He's like, no, you got to pivot and go after it and change direction.
Yep.
I left corporate America August 31st of last year. I left my job, which was a very nice job. I could have worked there the rest of my life as a chief sales officer for a very large mortgage company, and went all in on my coaching platform, all in on my coaching business, because I knew that I had something to share with other people. And I think that you and I have that in common, right? Like, I think that's probably where our best connection was, is okay, we failed at some stuff, but how can I help other people maybe not hit the ground as hard? They're going to fail, but how can we put a soft landing? I'm just curious, you run this company, Coastal Kapital, that is dominating. I'm watching you all over the place. Outside of that, what are you doing, to help more entrepreneurs and just work, help other people grow in the way that you've done?
So that's an exciting question. Thanks for asking, because Coastal Capital has been my baby for over 12 years. We are an equipment finance and business lending company, but how exciting is finance, right? So I wanted to change the way that we do things. And what I've realized over the course of this position and molding into the CEO that I have, is that we have a real need for the human touch back into the lending equation. You have a million different platforms and all sorts of different social media platforms, and you have different lending companies reaching out that you can just apply anytime. Well, one of the things that I've realized through lending is that when people are turned down, and that's that feeling of being let down, right? You're turned down for something because you just don't qualify. You don't qualify within this matrix. And it's the bank matrix that was built in the 50s. And so the 50s was a long time ago. Why are we not changing the matrix?
Courtney, I always say the banks want to loan you money when you don't need it, right? Like that's how it works, right? Like, if you don't need it, they'll loan you whatever you need. But if you need it, no, it's not going to work out for you.
Exactly. And so over the last couple of years, Chris and I decided to not only start lending some of our own money to some of the businesses as COVID hit, and we knew no one's going to lend to this industry, but we know how they're doing here locally, or we understand the business. We understand the human touch. We know that they have sweat equity in the business. And why are we not taking a chance on the things we believe in? So we started underwriting under an algorithm that we've had, really work for us in the last 12 years. And I started helping with book authors, doing, different coaching platforms. We started lending outside of the traditional box. Well, what happened there is I decided that why not go in for a 506c capital debt raise? And we create a platform where when we have interest, and won't be equity interest, but debt interest, we can use our platform and help other people. And not just, women in business, which I'm very passionate about, but people in business who may have had a hiccup, or maybe they started and they have a valuation on their business, but they have some hiccups on their personal credit. We have to start making the business finance system built to be for entrepreneurs, not for a credit algorithm underwriting. So in this economic time that has been a little crazy, we've seen a lot of default. A lot of the default has come from our 700 plus credit score clients that have had too much exposure because they were underwritten like a bank instead of underwritten as they're working in the business. And we have to change that. So Coastal Capital has pivoted. We have our investment platform open, but not just that, we are opening affiliate partnership offices so they can actually learn under our guidelines and then use our back end office, our algorithm, our underwriting. And so as we grow and grow the fund, we'll be able to really use our fund and our growth to underwrite under our own capabilities. And that makes us a private lender. And it's an exciting time to change the things that we found the breakage in through the 12 years. So
Yeah, I love that. I invest in private lending right now. I've got quite a decent amount of money on the streets in private lending, in the mortgage space,
yes.
lower LTV, higher risk individuals, but we loan on the individual, not on
Yes.
the other banking standards.
Yeah.
And my current delinquency right now is zero. I have zero of my clients that are behind. So, and it never really gets too far out of hand. And because the people have skin in the game
Yep.
and they have a personal touch, we're the people loaning them the money so we can have a conversation about it. It's not somebody that they're never going to hear from if they're if they're late, right? So
Yeah.
just kind of how did you come up with the algorithm to lend on that private side? Is it just by trial and error? I mean, like what does that look like?
Well, we have we have 300,000 clients in I've been doing this for 25 years. So I've been in business for 12 under Coastal Capital, but I started in 2007 on my own, in 2003 in the industry. And so I've been watching algorithm and underwriting for alternative lending for a long time. What we do is, because we're an asset-based lender, majority of the time, is we take a lien on the asset and we make sure that the risk of the file makes sense. So if we have somebody who's been in business for 5+ years and they have a couple dings on their credit, but they built their business credit up, we understand why sometimes you let some things go personally, but you want your business to stay active. We also make sure that the asset is a necessity, not an accessory. So people let to accessories go more than necessity. And so if you're a dump truck, company, and you are buying a dump truck, we know you're going to use it for business. But if you're buying a Corvette, we know that that's not probably a necessity. And so our algorithm is based around the fact that we want to make sure that we have sweat equity. We want non-absentee owners. We want to make sure that the owner is part of the business and the face of the business and things like that, mostly if we're lending higher risk, but we are in the alternative lending space. And that doesn't mean, I think a lot of people think that that's quote unquote high interest, and it's not, because we lend cheaper than the banks a lot of the times. But alternative lending takes a space where a bank would say no traditionally, or they wouldn't lend as much because they're capped under a guideline. So we're able to get really creative with what we're doing and lend under the terms that we really understand the algorithm. We also worked with a guy who left Caterpillar Financial, and came over and helped us with a lot of the algorithm based on our current flow for all of the years that we've done it. And so it was really analytics based.
Nice. So you have private individuals who are investing in your fund. Is that where a lot of those, is that the direction you're heading right now?
Yeah, they're accredited investors, and we actually Yeah, we just filed with the SEC. It just went live. We have not promoted it yet, except for maybe a couple things on social media because we wanted to get our affiliate program up and running. So I mean, we did about 17 million in funding last year. And so that was internal. And so we're looking for about $100 million to over the course of as we activate it. And we want to be able to have the placement throughout the country. And so we have a couple things moving right now that are really exciting. But we use internal lines currently, and then we have our external banking lines that we've been using for many years as a broker. And so we have a lot of things that we're still capable of doing without the internal funding.
That's exciting. I mean, like, there's a big opportunity for people that have the cash. First of all, I'm talking about on the investment side, to be in situations like this. You know, it's been a big windfall for myself and my family to be able to invest in things like that.
Yeah.
And again, if you're listening to this and you want to get into something like that, we'll give you Kortney's information, but also do your due diligence. Don't just jump in with somebody, that's not filing with the SEC, or somebody who says, hey, we can do this. Because there's a lot of, it's funny, we had a conversation that we used the F word, and I won't say it's not the F word you think before we got on here, because we're in the lending industry. I was in the lending industry for a long time. And in Florida, the F word gets thrown around a lot. It just does, right? Like we've all faced that in the mortgage business and the lending side. So
Yeah.
if you're looking to invest in something like that, make sure that you're dialed in as well.
Yeah, that's why creating those platforms, it's so important. I mean, we didn't want to put the cart before the horse, so we made sure that we were filed with everything, and we have our whole investment portal, and everything is ready to rock and roll. I would never want to invest. A lot of people you see, we work with businesses every day, and they'll take on an investor or they'll take on a partner, and people really don't know what they're getting into, even with partnerships and with partnerships with poor credit. And so we really become an advocate for those things. My guys are always taught in my office. I always say guys, but my people are taught in my office to just become an educator first. We're not in it for the monetary. We want long-term clients, and we want them to make good decisions. We want them to stay in business. And so if it doesn't qualify, we have to let them know, like, we don't want to put you in something that would put you out of business. And that's where we are much different than a different type of lender. And so it's an exciting time. I mean, Coastal's been around a while, but we needed to make a pivot, mostly to keep up with the Joneses in this type of economic time.
Yeah. Are you seeing the supply chain break up a little bit? Are you starting to see the equipment start rolling back in? I mean, I'm just curious what that looks like. 'Cause I know a lot of, like, I'm buying a new car today for my wife. Like, her lease is up on her car, and they just called me this morning. They're bringing the car to the house tonight for us to take delivery. A year ago, we wouldn't have been able to get the car. Like, it just wasn't there. We'd had trouble getting it. Now the cars are becoming more available. Is that the same in your industry too?
Yeah, it's well, we're deep into heavy equipment, yellow iron construction, things like that. And so a lot of our vendors, they're buying from auction because their manufacturing has been backed up, or they rented their current inventory because rent was so high on the equipment when nobody could get the equipment in. But what we'll never see again, and this has come from the top, Hitachi, I could say big names out there down, is you're not going to see the reseller having multiple pieces. You're not going to drive down, in Florida, we have Ritchie Brothers right here. You could drive down the street and you can see Ritchie Brothers auction, but you're not going to see the distribution of it on these vendors' locations packed with yellow iron like we used to see. They're only
Yeah.
going to be buying the supply and demand of what they are selling. And that's what makes it hard in the finance side of things, because people used to be able to walk on a lot and say, I want this, this, this. Now they have to order it. If they're ordering it, a lot of the manufacturers, they want that money in-house. They want to approve it internally. So you're dealing with captives. And a lot of times the captives lend too much, and they get the asset back and can resell it. So they get to double dip, but the client doesn't really understand that might be too big of a risk for them. And so we're not able to educate before they know sometimes. And that's what makes it a little harder in our industry. We're seeing the back end of it where people are saying, I want to refinance out of 0%. Well, that's really hard to do. And you're in a 84-month term and now you're upside down and you can't make your payments because you got into something that you were over. It was too large of a purchase for you. And so we want to just make sure that our education is going out there. And that's what we're seeing. You know, we are never going to see the abundance of yellow iron or equipment on people's lots anymore because they don't want to be hit with what they were in COVID.
Yeah, and the carrying cost of that stuff is just insane. I mean, like,
Yep.
I ran car dealerships for a long time. I know what it was to carry 500 or 600 cars on the ground. I can only imagine what it's to carry 50 of those big dump trucks. Like insane amount of carrying costs. I'm curious, have you put on, like, what are you doing to educate that consumer? Do you have webinars? Do you have stuff that you're trying to help the people that are trying to get in that type of industry where you are educating them up front?
Yeah, so what we do is we've been partnered all over the country with vendors and manufacturers and dealers. So we do things with their sales teams, with, our clients and things like that all the time. But I've recently been doing a lot of podcasts. So I've been on a lot of contractors podcasts. I've been doing some podcasts just to get the word out. And I do a lot of stage appearances. This year, actually, in just about a month, I'm doing the keynote for the Small Business Expo. And I try just desperately to get in front of business owners to let them understand the different arms and tools that they have to choose from. A lot of people will say, I just am going to bring a partner in because they have some cash. Well, that partner they don't understand ends up having voting rights for their business. And sometimes people give away equity when they don't have to give away equity. They don't understand that there's an option out there for a different type of finance, lines of credit, outside of SBA that doesn't collateralize everything. So just getting out there and being as vocal as I can in front of as many crowds is our concept. But when we start our affiliate program, it will be a 6-month platform and it will be kind of a coaching mentor platform, but we'll also have webinars that will be interactive for anyone who wants to jump on and learn.
Yeah, I mean, education is the key, right? And then it just builds consumer loyalty to your brand. Um, is there an opportunity for you to partner with the manufacturers when they don't have the opportunity to do the financing? Do you get referrals from that? Like when I was in the mortgage space, we get referrals from Truist Bank when they couldn't do an FHA loan or whatever, credit unions. We got a lot of business that way. Is it the same in your industry?
That's how we always work. We're a
Okay.
vendor first. So we partner with our vendors and we become their alternative financing or even their front runner. I mean, through the economic hardship of COVID, we were actually doing more than Caterpillar for the cat dealers. And so they were coming to us first. We also took a sponsorship spot over John Deere at an agriculture rally that was big in ag. And that's because our pricing was better and our contract was a little better than John Deere at the time. So sometimes we will take over the front run of the captive. And so it really depends on the economic time and how they've adjusted their internal lines.
Yeah, I mean, the captives turn off real quick. I mean, like we saw that a lot in the banking industry during COVID. The bigger banks decided to shut down a lot of the lending. Like they really dialed in what their approval window was. I mean, they made it like super narrow. And then we had alternative sources that we could do the same. So very similar to what you're talking about. I mean, people still needed equipment, right? People still needed houses. So there were
Yep.
opportunities there for the people that had the cash that did it. So look, I had a chance to hang out with you and your husband, who's a really cool guy because his name's Chris as well. So that was a win. But what do you think separates you two from your competition in your space?
I think honestly, in our space, I sit on our banking board on the association, and one of the things that no one has ever done in our industry is educate, and that is our biggest asset because Chris and I want people to win, and I think that separates us. I mean, we've both worked for all sorts of different lenders in the space before I went out on my own, before Chris came back and worked with me, and a lot of them, and it's not saying that they're poor to work with, but or even giving any incentive to not, but they're more boiler room mentality. It's like find the deal, close the deal, move the deal. It's like a big mortgage company. And so I feel that we, again, have more of a human touch and we really want to help people. And, the women in business side was big for me because even though we have such a big platform to lend so much money, I mean, we're a $2 trillion industry. We also still lend to less than 3% women. And it's not because of saying no to women, it's because of lack of knowledge that women don't know that there's an option. A lot of the times, mostly if they, let's say, stay at home, raise their kids, they were women veterans, they didn't establish business credit, or something happened in their life that they were said no to. More women, and I know being one, have the pride and that I'm going to do this myself. They don't know that there's help. And I think that more women are entering the entrepreneurial space, that if they have more education, they would know that there's other arms out there rather than getting in bed with somebody that you don't trust. And so that's something that I just feel that we need to get out there and still educate. And, we did a podcast the other day on the contractors fight, and we didn't realize how many contractors didn't know that this was an option. And we've had a lot of calls from that just doing the educational part, not even doing deals for them, just saying this is what your option is. And it's like we didn't know that people like this existed because we're not brick and mortar. We're not sitting there on the side of the road and your parents saying go to the bank and see if you can get a loan. This is a totally different thing that is, even though we've been around in such a large industry, it's just undereducated, and that's what sets us apart.
Yeah, I would say the big thing is the personal touch. Coming from the world of finance, I know that mentality. Our company wasn't that way. We were very big in personal touch and face-to-face interaction with our clients and referral partners, but that was the exception, not the rule. I like to think that you two are finance with a personality, which is hard to come by a lot of times, right? Like, we know what we need to do to accomplish this, to help the people out, but we also have to have a personality and some empathy along the way. And the fact that you lost a lot of stuff through a business, you can relate to some of these people, right? You're relatable. You're not somebody sitting in an office that has a script and I only can lend this and this is my script when I tell them no. Like, that's not what they're dealing with. So if you're listening to this podcast and you've been turned down or feel that that's something you need to be that you feel concerned about, talk to Kortney and Chris. I mean, like, they will definitely have a conversation with you, and it'll be a personal conversation, not getting transferred 6 times around the block. I had a nightmare thing with Chase Bank recently, just trying to set up a trust bank account. It was like, you would have thought I was trying to open up Fort Knox. It was the craziest thing ever. It took like 5 days to open up a trust bank account. Just insane. So that personal touch is something that we don't see enough in finance or enough in any industry. In the fact that you two are doing that is such a big deal. Such a big deal.
Yeah, we love the personal touch. It's funny. I always laugh because I have an office line and then my personal line, and we've kept it that way to keep it separate, for a while, or else we get inundated. Well, Chris never has done that. And so we'll be at home and he'll be getting pictures from equipment, it's such great friends with all of his clients. And so am I. I mean, we do have that, just that aspect of it makes it so personal. And it's like we just had a client call yesterday and he said, I need 9 trucks. And we know that he has big contracts with Homeland Security. And we know that he's qualified. He would never call his bank. I mean, he would always call us because he knows what we're able to do for him in the timely manner. And it's all relationship based for our company. If it doesn't do the client good, we absolutely say no, but we'll help him structure it for the future and growth and let him know which direction might be the best at this time, because we're not looking in the game. That's the difference. And I think that that's with every good relationship through life, and you learn that as you get older. So
yeah, no doubt. And I want to just go back to the education piece. I think a lot of people say they educate. A lot of people talk about that. It's in their core values of their company. And then when you really realize that they're not educating anybody, they're trying to educate you to believe what they believe. So I think that's a big difference. I think that's where you have just a huge opportunity in your industry to actually teach people what to do and not to do, regardless of how that affects you, them being a client or not. Like, that's, to me, that was when I started originating loans, when I was just an originator. and someone would say, Chris, I've got a better deal somewhere else. I'm going to go over here. I'd say, great. Let me look at the numbers for you to make sure it's what you think it is. Like, you don't have to come to me, but let me at least review the docs to make sure it's what they say they're giving. Right.
Yep.
And I can't tell you how many of those deals where they ended up going with that lender because it was a great deal, but then they referred me their family members or their friends because the other people they didn't have a connection with them. I didn't get the first deal, but I got the second, third, and fourth deals. Right. So I feel that you two are doing the same when it comes to that. And just where do you feel this business and this industry is going? Like, there's so much chaos in our world today. Like, I don't even turn the news on anymore unless there's a hurricane coming, just to find out when it's going to hit. And fellow Floridian, obviously here, you're over in my favorite place in the world. Siesta Key is my favorite place in the state of Florida. But where do you feel it's going with everything that's happening right now in the market?
In our industry right now, there's a lot of change. There's a lot of regulation happening because there are people who don't do the most honest service, I would say. There's just a lot of, just like in the mortgage industry back in 2008, there's a lot of things that were not, as they seemed they were. And so in our industry, there's a lot of change happening right now, but I feel that, I don't necessarily think regulation is horrible. I do think that it will, make some things more conservative, but with our approach and our education and private lending, I think that it's going to continue to be prosperous for all of the business owners that need to grow. And so, I mean, although there's a lot of change doesn't ever scare me. We've had a lot of change since, I've been alive. So I feel like if we bounce with the times and we really do our job and our due diligence, then we're always going to be able to stay ahead of, the game. And so there's scary things happening, but I try not to focus on that. I try to focus on the good things. I mean, there's always going to be change. There's always going to be election years. There's always going to be economic times that and there's always going to be debt in our United States. So it is what it is. We still have to trigger and move forward, and we just have a lot of platforms to choose from. And I feel like that's where the human touch comes back in any industry. So if you are a business owner out there, get in touch with your real people and the real humans, because when we have AI and all the platforms out there, you just don't even know which way to turn. And I feel like when it comes down to it, when you have that handshake and partnership mentality, you're always going to win.
I agree. I'm a firm believer in what I call OPM, which is other people's money.
That's what I use.
I leverage that anytime when I bought my truck a few years ago, could have paid cash for it. I'm like, back then I got my money super cheap. So I financed the truck. I took the cash, invested it into a private mortgage. And then what happened? Now I'm making this great arbitrage. So what I think most people don't realize is the wealthiest people on the planet use OPM all the time. They're always leveraging, right? They're always leveraging. They don't use their cash very often. They figure out ways to make the system work in their favor by doing that. And borrowing money is one of the keys. The other thing too is when you're borrowing money, you're helping the economy continue to thrive, right? If you stop borrowing money and paying cash, it totally slows the system down. So
I agree. And I think also, a lot of business owners, entrepreneurs become successful by using OPM so they can have cash available for investments. And so a lot of times, we even see it with our large contracting offices, not just for investments, but when they are up against a bid and they have to put a bond down, that bond might cost $50,000 to get a bid. And if they don't have that cash availability, they lose that bid. And so one of the things that you're up against is why pay cash. My favorite thing with OPM is you wouldn't pay cash for an employee before they did the job for you. Why would you pay cash for an asset that's going to generate revenue? The ROI needs to be created. So don't pay cash for an asset that's going to generate ROI. And that's with business in general. And I think commingling personal and business credit is something that really needs to be taught. We have a new business that came to us the other day, and they want to take out home equity lines for their new business. It's kind of a trial and error type of new thing. It's a fad thing. And I'm thinking, why would you take out home equity? But sometimes you can educate and they may not move forward with you, but you did your job with the education. Yep. So OPM is so important. It's so important.
It is. It's all about leverage and being able to have access to it. And in my opinion, lines of credit are super important. Get them when you don't need them, because when you need them, you can't get them. That's, it's
Absolutely.
always nice to have that, right? And I do that with my business. I've got a line that is available whenever I need it to access it. I'm a firm believer in that. So, Kortney, as we wrap things up here, first, appreciate you getting on the call with me. It's been very lots of great content for my listeners. So I can't wait for them to jump on here and share. I have a lot of entrepreneurs on here, and I've already referred you guys one person. I have several more. I'm sure on the way will get referred to you. But what's the best way to contact you guys?
You can reach us at coastalkapital.com, which is spelled with a K, the capital. So it's COASTALKAPITAL. And I'm also at CortneyMurray.com. And then if you're interested in the investment, we're invest.coastalkapital.com. And it has our whole platform and our PPM and what our alternative investment is. So there's a lot of ways to get in touch. I'm Kortney with a K. If you type it in, it's either me or Kourtney Kardashian out there. So
there you go. There you go. I would say you're the nicer of the Kortneys.
Thank you.
We'll leave it
I
at
was
that.
just laughing. We had a Google panel going on the other day. We were showing a Google panel, and it was like she bought all the Kortneys or something, because I kept pulling up after with my news articles. But that's funny.
Oh yeah, they dominate it. They do,
yeah,
for sure. So, well, thank you again, Kortney. I appreciate your time.
Chris, thank you. This was great. It was great seeing you.
Thank you for tuning into the One Hand at a Time podcast. Please make sure you like and share the episode, and we'll see you next time here at the One Hand at a Time podcast. Make it a great day.